The dollar is back and it's taking no prisoners, with the Brazilian real just becoming the latest casualty in its resurgence, recording its worst month this year as investors scramble to unwind their carry trades. This matters because it's a stark reminder of just how quickly sentiment can shift in the markets, and how even the most favored trades can become yesterday's news in the blink of an eye. The Brazilian real had been one of the darlings of emerging market currencies, but with the dollar roaring back to life, investors are rethinking their bets and taking their money elsewhere. As the real takes a hit, it's a sign that the global economy is still very much at the mercy of U.S. monetary policy, and that the Federal Reserve's next move will be closely watched by investors around the world. This could have far-reaching implications for emerging markets, which have been struggling to keep up with the pace of U.S. interest rate hikes. And it's not just the Brazilian real that's feeling the heat, other emerging market currencies are also starting to come under pressure as investors seek out safer havens. But while the dollar's resurgence may be causing headaches for some investors, it's a different story in Asia, where an AI-driven stock boom is enticing investors to take big risks. In South Korea and Taiwan, investors are piling into AI-related stocks, fueled by a combination of debt and a willingness to take on risk. This is a story that matters because it shows just how much excitement there is around AI, and how investors are willing to bet big on its potential to disrupt industries and drive growth. As we move from Asia to the US, a major development in the world of trade policy could have significant implications for the stock market. The Supreme Court's decision to unwind President Trump's tariffs could be a major tailwind for the market, setting the stage for a potential earnings boon for some companies. This is a story that matters because it shows how a shift in policy can have a major impact on the market, and how investors are always on the lookout for any sign of a change in the winds. But not all is well in the world of finance, as Bitcoin took a tumble on Tuesday, sliding below $60,000 as investors reversed an initial vote of confidence in Michael Saylor's financing overhaul at Strategy Incorporated. This matters because it shows just how fragile investor sentiment can be, and how quickly confidence can turn to anxiety in the world of cryptocurrency. With one of Bitcoin's biggest buyers potentially stepping back from the market, there are fresh concerns about the outlook for the cryptocurrency. As we look to the future, inflation remains a major concern, and according to Cleveland Fed President Beth Hammack, AI could fuel inflation, making rate hikes necessary. This is a story that matters because it shows just how complex the relationship between technology, inflation, and interest rates can be, and how policymakers are still grappling with the implications of AI on the economy. With inflation already too high, the prospect of AI-driven inflation could be a major challenge for policymakers in the months ahead. And that's all for now. Tune in tomorrow when we'll be exploring the potential implications of a U.S. recession on global markets.